Hello, everybody, and welcome back to this Family Building Society podcast all about Joint Borrower Sole Proprietor. In this episode, we're going to be talking about reverse Joint Borrower Sole Proprietor, which is where the children are actually helping their parents with their housing needs. And this is a relatively new trend to the market, isn't it, Paul?
Absolutely. I mean, historically, there was the original guarantor mortgages. They've kind of evolved into joint borrower sole proprietor, but you always kind of remembered guarantor mortgages being where the parents were helping the children. Certainly from our perspective at family, we've seen older borrowers who need support. At the end of the day, you've got clients out there who will have interest-only mortgages, perhaps, that they took out when they were 20s and 30s and have carried on just doing interest-only rather than perhaps changing the repayment vehicle. They get to retirement and all of a sudden their income has reduced from where it was. And therefore, perhaps if they're wanting to stay in that home rather than downsizing or selling, they're looking at the children helping. And the fact that we do that and other lenders are now moving into this space is a real positive for the market.
I suppose it's a similar underwriting process to the traditional joint borrower sole proprietor, or are there other things that you need to take into account or look at differently?
No, it's very, very similar. It's the same application that they complete. The only difference is that the children are coming on to help from the affordability perspective. So they are on the mortgage, but they're not on the title deeds. But no, it's the same application, same underwriting process. They do, of course, have to seek independent legal advice, like all of our joint borrower sole proprietor products. But no, it is the same application.
That's really interesting. And do you expect this trend to grow even more in the market?
If you look at the market as a whole in terms of what effectively is later life lending, Anna, that it's just growing and growing and growing. We're an aging population, and at the end of the day, clients need support. And we do standard interest-only mortgages, we do RIOs. We're an alternative to equity release, and then you've got the reverse joint borrower sole proprietor. It's trying to have a tool to help as many clients as possible, often that are perhaps underserved by the high street. And this is where the builders and society sector tends to excel. We don't offer equity release ourselves, but we're a stepping stone potentially to equity release. A client who is 70 years of age now may not feel that equity release is appropriate. By being able to offer them longer terms or joint borrower sole proprietor, it allows them to have a stepping stone before they perhaps do need equity release.
Grace, do you have anything to add to that?
No, Paul has answered that perfectly. The only thing is I would say is majority of our clients are of an older age. And as Paul said, it's being that stepping stone, being that alternative option to, say, equity release. It's not to say that equity release might not be, the long-term goal eventually, but it's those that are not quite ready to go on to that yet. Or it might even be that the kids aren't ready to say goodbye to their family home for, their parents to downsize to, and they want to keep them there a little bit longer. It's just being able to find another way to help. And also a lot of these clients might also still be working. People are working longer, need mortgages for longer. And whilst we might not be using that earned income for affordability, they can still service that mortgage payment. So having reverse JBSP and having the kids come on there and help them is a great option for that as well.
If you think about this market maybe only 15 years ago, we're not going back that far, equity release was predominantly the product that was available for customers. Now the market has evolved so much in such a relative short period of time. Those options and these options are there now, and we do even see people coming back from equity release to standard products because they do have income that is quite comfortable in paying a mortgage payment. And so equity release is really important to the market, but there are now options for clients that perhaps there weren't not that long ago.
There's been a lot of product innovation in that space. We've got hybrid lifetime mortgages. There's a lot of retirement interest only. There's a lot of different products in the market now. Are there a lot of lenders in the space who do reverse joint borrower sole proprietor like you do, or is it something that there's only a few lenders in that space?
I personally don't know of lenders that do it the reverse way aside from ourselves, and I could absolutely be wrong there. There could be other lenders, but I don't think it's as big as sort of your traditional joint borrower sole proprietor proposition.
it does seem like a bit of a niche offering at the moment, but from what you guys have alluded to and talked about, this could be a growing area of the market. People are getting old, people are coming onto the property ladder at a later time. People are also getting, living longer and, possibly having other financial commitments, so they might need more support. With other products and you mentioned other products that can be used in this area, like retirement interest only. Paul, I don't know if you could go into a bit more detail about the later life lending and other later life lending products that could be used in this kind of reverse bank of mum and dad scenario.
The classic products for, generally speaking, for people in later life are standard interest only. If you're happy to downsize with your property, or you may have other assets, buy-to-lets, second homes, etc., in the background, then interest only can potentially be a very useful tool. And we go right the way through to 89 years of age at the final time we will take an application. That is very old, but it allows a greater degree of flexibility. Rio has I think is still yet to evolve properly. It's a modest product. I think if you probably talk to if memory serves, Leeds Building Society is probably the biggest seller of Rio mortgages, but the average loan size on them is almost tiny in comparison to standard interest only. And the main reason being is, and I hate to use this phrase, but it's the death stress test. The minute you extend the term of a mortgage to effectively open-ended, which is what Rio is, or until long-term care or death, you start being restricted as to what incomes you can use. We, as a lender with term mortgages, i.e. the interest only comes to an end at a certain point, we're able to use far more incomes and far more types of income and be far more flexible in our affordability, which can make a huge difference to those clients. And if I just use one thing, pension pots. Pension pots, if you're doing a Rio, you end up having to annuitize them, and the client might not want to do that. You can't necessarily use it on a joint application, whereas with us, on a standard interest-only mortgage, you can use it. You don't even need to have to draw from it, and we can use it as income as it's there in the background, and that can make it so much more flexible for the client.
I think that's a really good options for brokers to have in their roster. Refocusing back on reverse joint borrower sole proprietor, do you think this is something that brokers bring up with their clients? Do you think that there's an awareness that it can be used in this more non-traditional way?
Yeah, absolutely. I know from the conversations that I have with my brokers when we are looking at sort of that standard interest only proposition for those clients lending into retirement, and it's saying in an example where it doesn't quite stack up on affordability, the conversation that then turns to, okay, could reverse JBSP work? Could the kids come on and help them there? And as I said earlier, it's not forever. It's just sort of bridging that gap and giving them an alternative option right now.
Paul, do you have anything to add to that?
No, absolutely. But I guess, again, I know it comes back down to education. Because there are only a modest number of lenders in this space, many brokers, advisors just don't realize it's a potential option. So keep educating yourself, keep coming to events, keep watching the podcasts, etc., listening to the podcasts, because the market is continually innovating. Reverse JBSP is just one of those innovations that's coming in a relatively short period of time.
Now, out of interest, with the grandparents or parents who are on the other side of this, do they sometimes need a little bit of persuading? Is there sometimes a bit of a dynamic shift in terms of, parents are just like, oh no, but it's my role to support the child, not the other way around? And I suppose how can brokers manage that?
Yeah, I guess so. Putting my shoes in, that doesn't make sense. Putting myself in the broker's shoes, I could imagine that is a common conversation they're having with their clients. But actually, and it's just sort of going back to what Paul was just saying about educating yourselves as brokers. It's then also about educating the clients as well and reassuring them of these options. So, yeah, I can imagine it probably is a common conversation, but people need to find a solution, and the willingness of having kids come on to the mortgage and helping them. Yes, they're equally liable for that mortgage, but they're not losing that first-time buyer status with this product. So, yeah, I think that's a way of positioning that as well to the clients.
That's really interesting. I didn't realize that you wouldn't lose your first time buyer status if you end up using this to help your parents or grandparents. That's a really good point.
Yeah, absolutely. Because you're not party to the title deeds of the property, so they don't physically own it. So they're still keeping that first time buyer status there.
Are there any other benefits to using it in this way or using reverse JPSB over other products for this kind of scenario?
I think there is, and effectively, you could ask your son or daughter to try and raise the funds on their own home, and effectively put all the risk onto them to help your parents, rather than let the parent help themselves, but with a bit of support. And I think we are seeing a very changing and evolving world in financial services, and Grace and I are at the two end of spectrums of our effective careers, and I can only say what happens in my own home. I have a 17-year-old son, an 18-year-old son, who keeps saying to me, "Don't worry, when you get older, I'll be buying you a house and I'll put in a stair lift, etc. for you." It is seeing now that children and the kids will help their parents a little bit more, because they've seen this bank of mum and dad help them get onto the property ladder. You look, I still think Bank of Mum and Dad is the fifth biggest lender in the UK. And we do an awful lot of that type of lending as a business, because we do, later life lending, which allows the parents to raise funds on their own property to gift away to their children. So I think there's this realization that it doesn't just work one way. You might have to give something back later on down the line.
Absolutely. It's very intergenerational lending at Family Building Society.
Yeah, it's like you said, it doesn't just go one way, it can go both ways. And I think that's a really good note to end on. If people from both ends can end up supporting each other. Just to really hammer it home, if brokers want to learn more about this kind of lending, what resources can they use, or what resources would you direct them to?
Look, utilize your lender's sales team. Look at the BDMs. They are massively important to your business. If you talk to us, and I've seen only just this week, people highlighting the fact that it is really, really important that you talk to your BDM. They're such a useful resource. And with the greatest respect, lots of media coverage that later life lending and joint borrower sole proprietor gets, and 100% mortgages, 95% mortgages, etc. Utilize that. Get to your events and talk to us.
Grace, do you have anything else to add on that? Any resources that you would highlight?
No, Paul's covered that perfectly. I think as well, just to sort of reiterate on the BDM side of things, BDMs talk to other BDMs as well, and we're familiar with other lenders' propositions and the products that they can offer. So, if one lender can't help, they might be able to also recommend you another lender to go to as well. I was at an event yesterday and I learned lots about Tipton, who was sitting next to me, and where we might not be able to help, they can. So yeah, absolutely, use the media coverage on the products, use the BDMs, attend the events, you name it, and the criteria and the knowledge will be there.
I'd also say that Mortgage Solutions, we have blogs, we have news coverage, and that's a really great resource as well. And intermediary pages of lenders are also very helpful, and they'll have guides and BDM contacts and all that good stuff. So unfortunately, that is all that we have time for. But please tune in for the next episode, which is going to be talking about the Bank of Mum and Dad, which, as Paul rightly pointed out, is one of the largest lenders in the UK. So I hope you can tune in next time.